Hey there, this is Trader Tim from EminiMind, and in this video I'm going to show you how you can use the NYSE Tick to identify trend days before they happen. Um, Bringing you this video kind of midweek because I'll be at the Traders Expo on Friday. So if you're there, stop by. I'll be presenting in the afternoon, Friday afternoon. But let's talk about the E-mini S&P here. Before we get into a couple of trades from today, as well as how that NYSE tick came into play, you can see in the daily chart we are approaching our lows from where we are anchored to of this 50% retracement. And I'd keep an eye on this 40.72 if we get some sort of a big intraday sell-off. We've got about an hour and a half left in the day today, and just kind of been a general slide lower. If we continue this in the next couple of days, watch for that long tail to be a big intraday reversal, and it may be enough to take us down to the target and then bounce us off of that level. If we go to the gaps that are unfilled, took out a couple yesterday, or one yesterday, but the 41.51 in the quarter, 41.07 in the quarter, these couple of gaps are close enough to that negative 23% target of 40.72 that, at this point we've got the momentum to continue the slide down. If we turn to the intraday, I want to talk first about the NYSE tick and how you can use that to sort of determine if these are going to be a trend, if it's going to be a trend day before it even really happens. And then we'll talk about the couple of 15-minute breakouts that have been really, really good trades this week. So this morning, if we look at the first, really the first opportunity after the 15-minute mark, it actually was a little long, a counter trend long, where we came down. We put in a low tick at lows at 755 here, and then we rallied. We broke this little swing high over here. We pulled back to the 50%, and then we got a little bit of a push up. It was enough to at least get a first target and then trail the next retracement before it turned around and we ended up going lower throughout the rest of the day. And anytime we have a low tick that lines up with lows and it's in, say, the first 20 or 30 minutes, once we break that low, we end up with a divergence. And so then what ends up happening is we get a low tick over on the NYSE tick that only lines up with low price temporarily. So like at 8 o'clock, we had a low price on the day and a low NYSE tick. But then, 30 seconds later, boom, we're making a new low. And so when you have a NYSE tick that lines up with low price of the day, low tick at lows, that is immediately broken, and it's early in the day, that's a good sign that we're going into a trend day. And so as we continued through the day, all of these lows that we ended up putting in were really not buyable. You don't want to be just kind of doing counter trend trades over and over and over again on a trend day lower. It's okay to take the first setup because when it's this early in the day, we don't know if it's going to be range bound or trending. The other thing that I look at is the first 30 minutes of trade. I like to mark the high and the low, and so today that looked a lot different than yesterday. Today, here's our first 30 minutes of trade, and we did not spend any time after the 30-minute mark in that area. That's another sign that we're going into a trend day. Let's go back to yesterday, and we see the first 30 minutes of trade looked something like, let me just draw it like that. That was the first 30-minute range. It was really big. We peaked above it for just a couple of ticks and then spent most of the morning in the first 30-minute range. And this is a dangerous place to be when you're in the middle of a range like that. And then we ended up with kind of that sine wave, which we talked about in the during the live trading session yesterday, where we move up and then we move back down, breaking below the first 30-minute range, but then we come up and return sort of near where we opened, and it kind of looks like a sideways S. But if if you're trading in the morning session, most of what we had was range bound within that first 30-minute range. So it makes it more challenging, and you want to be looking for, shorting at highs and buying at lows, as opposed to trying to buy and sell in the middle of that range. Now, in today's case, we were not trading in the middle of the range, we were trending. And on days like today, something that happens is we start trending off the open and we don't get any retracements. So what happened today, and this happens a fair bit, the only, or the first, I guess, full retracement on the larger time frame, whether on a 5-minute or a 15-minute, it occurred well after the morning session over here. That was really the first larger halfway back. Up until that time, I'll switch it to a 5, we didn't have any halfway backs trade. And so it can make it hard to get short in this case because the market's going down. And what I like to do is, as a lot of you are familiar with, the 15-minute breakout. So I just bracket the first 15-minute bar on days where we don't fill the gap right at the open, and then just do a buy stop above, a sell stop below, one tick above and below. And today it ended up moving down, so 43.23 and a quarter. We broke that pretty quick. Only traded in 2 points. I like to use a 4-point stop on the ES, and then we just down, 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 and you can just trail your stop above each candle's high. And this one went for a long ways. Ended up being like 44 points all the way down. Ended up getting taken out down here. Yesterday we had kind of the other direction. We ended up with a 15-minute bar that broke to the upside, and then just trailing each candle takes you out up here. So two nice back-to-back 15-minute breakouts, and they're nice because when you start breaking down like we did today, and we don't have any reasonable retracements, or we start to get really, really low in the trend, and then you feel like, well, am I selling lows all the way down here? If you can get short from the opening 15-minute bar, then you don't really have to worry about that. One thing I will say is with any type of counter trend trade, so like if you are trading the ES and you take the 15-minute breakout short, but then you come in here and you try to take a long setup, well, that's going to offset. You're going to basically be closing out your short position, which you could do it that way, take the long, close it out, and then when you're getting short again, you would essentially be getting stopped out of your long and getting back into short. But you can also just have 2 accounts, or I know for some of you, if you're trading the micro, you could trade the micro ES and then the regular ES if you wanted to do one strategy for one and then one strategy for another. So just a little note on that. And then let's see, just going back to my notes. Yeah, I think that does it for today. The NYSE Tick, really helpful, identifying trend days. The high and low of the first 30-minute range, also really helpful to determine, are we likely to be range bound, or are we likely to be in the trending scenario? And then that 15-minute breakout, really, really good trade. And obviously all of the retracement trades. Didn't have too many of those this week just because of the way the market shook out. And you can always tune in to that live trading session on Tuesday over at EminiMind.com/VIP. So hope to see some of you at the Traders Expo on Friday in Vegas. And if you have questions, drop them in the comments below. Thanks, and have a great rest of your day.